All right, it's time to talk about market timing and these doom and gloom headlines that you read on Market Watch and elsewhere. Are you one of these people who gets spooked and sells off your stocks just because some expert can see into the future and they know that the stock market is going to crash? Well, I think you'll find this video entertaining because we're going to take a look at doom and gloom headlines that I've been tracking, and these experts have been colossally wrong for years now. This bull market we've had since 2009 has made mincemeat out of market timers. And a long time ago, I read in one of Peter Lynch's books, I think it was Beating the Street, he said that basically there's always something to worry about. So avoid weekend thinking, meaning invest for the long term, and ignore the latest dire predictions. Nobody can predict the direction of interest rates, the future direction of the economy, or the stock market. So dismiss all such forecasts. So anyway, here we go. Published January 11th, 2016. Bearish JP Morgan says sell stocks on any rally. Wow, how could you not trust JP Morgan? And I'll tell you why. They're in the business of drumming up transactions for their brokerage business. They don't make money if you sit tight. So as you can see, this was terrible advice. Then we get to September of 2016. U.S. stocks are in danger of rolling over. Then we have somebody who identified a pattern that signals a potential 25% plunge for the S&P 500 by spring. Then we have from a hedge fund manager, we believe we are in the midst of the market correction we have been expecting. It will likely persist over the next 3 to 4 months and be the largest correction since the 2008 crisis. Then on to October of 2016. S&P 500's triangle chart pattern warns of a big sell-off, analyst says. Then we have this one. Know when to fold them. The stock market just gave us 3 ominous tells. Also around the same time period, who could forget all the parade of experts who were saying that if Trump wins, stocks crash. Mark Cuban preparing for a crash. If Donald Trump wins, there's no doubt in my mind the market tanks. How could you question Mark Cuban? He's a billionaire. He's on Shark Tank. Oh, that's right. He had a spat with Trump going way back, even before there was such a term as Trump derangement syndrome. And then here we have an investment bank and financial services company that's over 300 years old. How could they be wrong? 11 to 13%. Then we have Fortune magazine. S&P is expected to fall 7% on a Trump presidency. These people were all wrong. And then after the election, they kept doubling down. Trump rally to be followed by 11% stock market tumble. Then January 2017, beware of the Trump dump in stocks as rally peters out. Then we have 4 signs a stock market sell-off in February may be in the cards. Then on to March of 2017. This chart says a sell-off is looming as fear stalks the stock market rally. Stop. This is not like the dot-com bubble. It's much worse, according to this chart. And then this is the most overvalued stock market on record, even worse than 1929. And then here we have another brokerage firm. Goldman Sachs says stock market rally may hit the brakes. And then here we have a hedge fund titan. How could you second guess him? Why, one hedge fund titan is bracing for all hell to break loose in the stock market. And then we have revered fund manager Bill Gross warning that U.S. market risk is at highest since 2008 crisis. Here's another one. U.S. stock market will likely top out in the next 3 weeks. And we have 7 signs the stock market is ready to run smack into a wall. And in August of 2017, Ron Paul was saying that stocks may get chopped in half within a year. And not 1, not 2, but 3 firms see mounting evidence that global markets are in the last stages of their rallies before a downturn in the business cycle. And then we had Harry Dent predicting that Dow could plummet to 14,000 by April. Tom McClellan, we're in a bear market. And 3 days later, I found this article, stocks may already be in a bear market, and here's how long it could last. And then we get up to just a little over a month ago, Monday's nasty reversal is evidence that the worst is far from over for Wall Street. The Dow went up, right after this article, the Dow went up 7% in 7 trading days. A day later after this article, Jim Cramer, this market is reminiscent of the worst crashes I've ever seen. The Dow proceeded to go up 5.25% in the 6 following trading days. November 20th, Goldman says it's time for equity investors to boost their cash. November 27th, Jim Cramer says stocks are opening up huge on nothing, sees signs of classic bear market. And sure enough, after this was published, stocks up 4.4% in 4 days.